Event risk is like some events can result in the financial position of the firm can be severely impacted. Okay, now when the financial position of the firm is severely impacted, the bond price will also be impacted. So an example which I can take is the British Petroleum. When there was an oil spill in the British Petroleum well, okay, what happened is they had to pay some $20 billion fine. This $20 billion fine is a huge amount, and as a result what they had to do was they had to sell a lot of their cash generating assets. Okay, so when you are selling those, what will happen is your financial position has deteriorated. Okay, if BP bonds, if you see, the BP bond performance would be, or the price would have gone down. Okay, so one of the example is disaster. Okay, because disaster can impact the cash flow and the bond prices will suffer. Another example is corporate restructuring. So the many companies, what they do is they restructure. Okay, they restructure themselves, and this restructuring can impact their cash flows. Okay, and also they can impact their debt ratio. So think about a company A. Okay, it had a division, okay, which was a cash generating division. Okay, and this was the company which issued the bond. Okay, now what the company says is it will split the cash generating company to a new company, and they would have received the cash, okay, which they want to use it for some purpose. Okay, what happened is because of this cash generating business, which was cash generating on an ongoing basis, since this is gone, the company's capability to generate cash has reduced. As a result, what happens is the probability that the bondholder will not get coupon payment has increased. Okay, so this can impact the bond prices. Okay, there can be other issues like regulatory issues. Some countries can say that they will not allow a typical type of company to operate in India. Okay, so let's say one regulatory issue, if you see, there is a case of Uninor, right? What happens is in Uninor, so it's a Norway company, Telenor, which has a subsidiary Uninor. Because the government has scrapped the license, what happens is Telenor will have to suffer huge loss. Their loss they are saying is 2 to 3 billion. Okay, this is a huge loss for a company like Telenor, and what will happen is if they had issued any bond, the bond price would have decreased. So regulatory issues is a problem. Regulation can be imposed which may result in increase in cash outflow. So think about, there was a previous case of Hutch or Vodafone. Okay, Vodafone was in a tax battle with Indian government. If the tax battle in this it was in favor of Indian government, they would have to sell $2 billion. Okay, so this $2 billion was a huge money. Okay, so as a result their cash outflow would have increased and the bond prices would have decreased. Okay, for a financial institution, the government can prohibit them from holding certain type of assets. Okay, so they will say that okay, this some investment companies, so they, let's say the government says that the bank cannot invest in any asset which is less than AA. So banks typically will have A, triple B like that. So if they are saying that this they cannot hold, so what they will have to do is they have to sell this asset. When they are selling this in huge quantity, the price will decrease. And if you are unfortunate owner of such bond, what will happen is you will get impacted.